the next regular pay date under FLSA. As we well know, that is not necessarily true for most states. Most states have much more strict laws that require final pay to be paid out sooner than the FLSA requires it. So make sure that you're watching the state laws as well. Taxable wages, the IRS defines taxable wages as all compensation an employee receives that is not specifically excluded from taxable income by law. Because of this requirement, fringe benefits are taxable in many cases. So if you get a gift card from your employer or something like that, they are generally taxable. So you have to be careful of that. Constructive receipt, regardless of the date printed on an employee's paycheck, the date that triggers the employer's withholding and deposit obligations is the date the paycheck is actually provided to the employee. So as an example, George was out of town on July 1st, a biweekly payday. Because of a business meeting with a client lasted longer than expected, his check was kept at the office until his return on July 5th. Because his wages were made available on July 1st, they were constructively paid to George on that day, and his employer was responsible for withholding any applicable taxes at that time. A different example, on the other hand, Maureen is scheduled to receive her last paycheck of 2020 on Thursday, December 31st. Her biweekly wages are $4,500, and she has been paid in excess of the Social Security wage base for 2020. Because of system problems, Maureen's employer is unable to issue paychecks until January 4th, although they are all dated December 31st. Maureen is not constructively paid her wages for withholding tax purposes until 2021, when her previous earnings for the year are zero. Therefore, the entire $4,500 wage payment is subject to Social Security tax, and the employer must match that. If she had received her paycheck on December 31st, her wages would not have been subject to Social Security tax or the matching portion by the employer. The whole payment is obviously subject to Medicare because there's no limit on the Medicare. So you want to be sure that whenever the employee, the payment is made or the wages are made available to the employee is when the constructive receipt is actually happening. So imputed income represents the value of the employees, represents the value of the benefits employees receive from the employer and must be included in the employee's income. In most cases, employees do not receive cash as the benefit. Employers are required to impute income to employees for each taxable non-cash benefit received by the employee. So basically you have to add everything in there. So kind of what I said about a gift card. If you're given a gift card for $50 to go get dinner with your family, then they have to include that in taxable wages. So when you calculate the taxes, you add in the $50. So as the example shows down in the bottom, if somebody's actually getting a salary of $1,500, but you need to increase their taxable wages by that $50 for the gift card, then you would actually calculate their taxes on $1,550 instead of just $1,500. And then you would subtract out the 50 again because they're not actually getting paid the $50. So you want to be a little careful of that. Okay, federal income tax withholding. Here's the fun part. So to calculate federal taxable wages, we determine the taxable wages by doing their pay rate, whether they're hourly or salary, times the number of worked, if they're a non-exempt employee, and then any amount of non-cash pay included, as well as, and then we subtract out any pre-tax benefits. So when calculating the federal tax income withholding from wage payments, the IRS prescribes which methods to use. The employer may use the wage bracket or percentage method. If the payment is considered supplemental wages, then the optional flat rate method or mandatory flat rate method may apply to that payment. Does anybody know how much the limit is when the mandatory flat rate method is required?
Like $1 million.
It's $1 million, yeah. So the optional flat rate, if you have not earned more than $1 million, works, but it's mandatory if you've earned over $1 million. Occasionally, An employer will provide cash or non-cash payment of wages and gross the wages up in order to provide a specific net payment after taxes to the employee. We'll go over that in a bit. So this is our handy dandy worksheet of how to calculate taxes. It's long, it's complicated. That's why we're thankful that we have systems generally that do this calculation for us. But when doing the CPP, you have to be able to do it by hand. So we're going to do a little bit of that today. Okay, so let's work through an example. So Sonia receives $1,340 in taxable wages on a weekly basis. Sonia claims married filing jointly with no other adjustments on her 2020 Form W-4. For wages paid in 2020, look at the table for weekly payroll period, which I have next to it. Then find the appropriate wage bracket. So she earns $1,340. So if you look over to the far left, find the one that says at least $1,340, but less than $1,350 to figure out what her withholding is going to be. So if you look across that line and look under married filing jointly, then you get $97. Does everybody see that? Mm-hmm. So this example is slightly more complicated. Jack worked 3 out of the last 7 days and earned a taxable income of $385. On his 2018 Form W-4, he claims single with no allowances. Assuming the payroll period to be 7 days, we're going to divide the $385 that he earned through the period by 7 to determine the average daily wage rate of $55. Then use the single person's daily payroll period table and look at the daily wage rate of 55 to find the daily withholding amount of $5. Then we're going to take that $5 and we're going to multiply it by the number of days in the period, which was 7. So 7 times 5 is $35. So using that method, we would withhold $35 from Jack's 3 days worth of pay of $385. It's pretty rare, I think, that employers use a daily taxable wage table. It may become more prevalent now that same-day payments seem to be becoming a thing, but haven't seen a ton of it yet. Okay, so if an employee earns $1,775 semi-monthly and claims head of household with 1 qualifying child under the age of 17 on a 2020 Form W-4, using the wage bracket method, calculate the employee's semi-monthly federal income tax withholding.
Again, if you are here for the RCH credit, please type your answer into the chat bar.
So I'm gonna put 184, but I know it's not right because I haven't done this since manually, since the new forms have come out, so.
Melissa, will you give us a hint? I used to do it with the old forms, not the new
Sure.
forms. So
Well-
with the qualifying child, where do we see the deduction for that?
So, if you, so let's just look at the answer here. So the $2,000 for the deduction, you have to take that 2,000 and divide by 24. And the reason that you're doing that is because they're semi-monthly.
Okay.
And so that $2,000 gets divided by 24, which gives you 83.33. So then you take the 109 from your table, subtract out the 83.33 and get 2567. So this 83.33 is that complicated piece that comes in for the deduction for the child.
Okay, give me just 1 second.
Okay.
So the 109 was, can you move the answer so I can see the table?
567.
So the 1770 to 1790 is right here. So under
Okay.
the head of household is 109.
Okay,
And then the 2,000 divided by the 24. And I have a more complicated example with where I did math and I tried to figure out the answer on my own. And I put it up for you so we can look at that one together. It is, my other example though is for the percentage method because it is significantly more complicated without just a table to figure out. So the other method is the percentage method, which again is significantly more complicated, but it's also more versatile. So the wage bracket method has limitations because there's only so many things they can put in the wage table. It only goes up so high. So the percentage method is what most automated systems use to be able to calculate because it can expand up and up and up without end. So here's the example that I have. And well, this is just the worksheet showing you what we're going to do. And it tells you each step, but I have an example to go through that where we actually are going to calculate each line. Okay. So here is the table that we're going to be looking at when we're using the percentage method. So these are the annual amounts. This is whether you're filing married, jointly, single or married filing separately, or head of household. And then this side is if step 2 checkbox is not checked, or if they're using a 2019 form or earlier. And this one is if they're using a 2020 or later, and the box in step 2 is checked. So let's go through an example. And here's our example. So Sharon is paid $2,350 biweekly. She claims married filing jointly, $2,000 in step 3, and $50 in step 4C. So if you recall, step 4C on the W-4 is additional withholding. So she wants an additional $50 withheld. So like I said, I did some math and worked through this example together or for you, but I kind of put it in here so it would show up, I hope anyways, one line at a time. So step 1, we want to enter the employee's total taxable wages this pay period. So as our example said, that was $2,350. 1B is enter the number of pay periods. So the pay periods, they told us it was bi-weekly, so we're going to put in 26. 1C, multiply the amount on line 1A by the number on line 1B. So 2,350 times 26. If Melissa did math correctly at 4 something this morning, it's $61,100. Next, we come to if the employee has submitted a Form W-4 or for 2020 or later. So they told us in the example that she does have a Form 2020 W-4. So we can go ahead and do 1D, which says enter the amount from step 4A of the employee's Form W-4. They didn't tell us she put anything on 4A, so we're going to assume that she put 0 or nothing. Now we're going to add 1C and 1D and get $61,100. 1F says enter the amount from step 4B. Again, they didn't tell us that she entered anything on 4B, so we're going to assume she left it blank or 0. 1G says if the box in step 2 of the form is checked, enter 0. If the box is not checked, enter 12,900. If the taxpayer is married, filing jointly, or 8,600 otherwise. So they told us that she's married. She is claiming married, filing jointly, and they didn't tell us that the box was checked. So we're going to put in $12,900. Gosh, aren't we glad our system does this for us and we don't have to do this on every paycheck. Now we're going to add lines 1F and 1G, which gives us again 12,900. Now we're going to subtract line 1H from 1E. If 0 or less, we're going to enter 0. It's not 0 or less, so we're going to go ahead and enter the actual difference, which is 48,200. The next section would only be completed if you were dealing with someone who had not submitted a Form W-4 from 2020 or later. Since we know in our example that she did submit a Form W-4 for 2020, we're going to ignore those 3 lines. Okay, step 2. Gosh, this is a long process. Step 2, based on the employee's adjusted annual wage amount, then we're going to try and figure out what we're going to withhold. So we're entering from line 1I or 1L above. Since 1L was not filled out because the person did a 2020 W-4, we're going to use line 1I. So we're going to put 48,200. Now we need to find the row in the annual percentage method table, which I have given you over here. So we're going to find the row that is at least the amount in column A, but less than the amount in column B. So if we look at our table, I have found the row that 48,200 falls into. So then it says enter the amount here from column A of that row. So we're going to put in 31,650. Then it says enter the amount from column C of that row. So we're going to put in 1,975. Then enter the percentage from column D of that row, which is 12. By the way, this was much easier before 2020.
Yep.
Then we're going to subtract 2B from line 2A, and we get 16,550. Now we're going to multiply 16,550 by the percentage of 12%, and we're going to get 1,986 bucks. We're going to add 2C and 2F, so 1,975 plus 1,986 gives us 3,961. Then we're going to divide that by 26 because this person is paid biweekly. And we get 152.35. That's our tentative withholding amount. Now we have to figure out what other adjustments there are because of other things that are on the W-4. So step 3 is dealing with tax credits. So if the employee's form W-4 is from 2020, enter the amount from step 3 of the form. Well, in step 3, she put 200, Sharon put 2,000. So we're going to take 2,000. Then we're going to again divide by 26 because there are 26 pay periods, and we get 76.92. Now we're going to take our tentative amount of 152.35 and we're going to subtract 76.92 and we get 75.43. Down in step 4, we're going to deal with all the rest of the stuff that they put on form W4, the form W4. So on line 4A, we're doing step 4C from the W4, which Sharon put 50 bucks. So now we're going to add lines 3C and 4A and make this the amount to withhold on the pay period. So we did 75.43 plus the $50 and get 125.43. Wasn't that fun?
Oh my gosh, how many times did you have to do this on the CPP?
Well, like I took the CPP on 2018 data or 2019 data, and it was not this complicated. But I mean, they made
I mean, it wasn't a ton different, really. I mean, they gave you an amount to deduct, and now you just have to calculate that amount.
Correct.
Because all this does is if you look at your Form W-2 at the end of the year, in box 1, you're gonna have $61,100. And then you're gonna look at your 1040 tax return, and you're gonna put box 1 on line 4 of your 1040. And you go down to the adjusted gross income and you get your standard deduction. That's what that 12,900 is. It's that standard deduction on your 1040. So it just reduces your income, and then that's all it is.
And in the old way, it took the dependent amount and made them as exemptions, which just changed the withholding amount. And so it is really just a different method. The only thing I do like about, I mean, this form makes it pretty simple to figure out what you're doing as long as you follow the steps. Now, I have to preface the next thing that's going to pop up with, I have no idea where this came from. So this is the exact same thing we just did on the previous page. I just had worked out my math to show you where all of the numbers came from. Down at the bottom, they got to the same thing I did. Sorry, I don't know how to work PowerPoint. 125.43. Then all of a sudden, the next line in the book says the amount of income tax withholding for Sharon will be 131.46. Why did this number increase by $6.08? I don't know. Or $6.03? I don't know. I think it's a typo in the book because I can get to this number. I don't know where this one came from. So anyways, just a heads up on that. Okay, so
Oh,
Practice.
don't make us do it. It's a group, it's a team effort.
it is a team effort. So I did the math again.
Thank you.
I did the math again. So
Okay.
we
Do they
come
give
out
you the worksheet when you're in the test, or do you just have to memorize all of these steps?
because I haven't taken the 2020 or later version. I can't tell you that. I can tell you that in the pay train, they give that as one of the resources. And I can tell you that when I took the test, the resources that were in the pay train were very, very, very similar to the resources that were actually provided on the test. So I can't say for sure. I do think that if you look through the APA, the booklet, they tell you what resources you're going to be given. So you may look through that to see if that worksheet's going to be given to you.
I think if you do it 4 times.
Yeah.
Manon, I know, would
Yeah.
memorize it.
Okay. All right. Pop quiz. Here we go.
So again, I did it together. Do you guys want to work through it alone or do you want to look at mine where I did it?
We'll just watch you.
You have the resource, and Manon, you may have to send out the updated PowerPoint because that wasn't in there when I did it. So here's my work. Again, the same worksheet. So the employee's taxable wages are 5557.19. We're biweekly, so 26 pay periods. Do some multiplication. We get 144,486.94. There's nothing on 4A that they tell us about, so add them up. Again, we get 14444.86, or I'm sorry, 144,486.94. Step 4B, they don't tell us anything, so we're assuming that's 0. We're gonna put 12.9 again, based off of our rules. Add. And then we're gonna subtract again, and this time we get 131,586.94. Again, we're gonna ignore this part because the person has a 2020 or later W-4. So we're gonna put the adjusted wage down there. We're gonna find our line item. This time we're one bracket higher. So we're gonna put in 92,150. Column C is 9,235. Our percentage this time, instead of 12 like last time, is going to be 22. We do some multiplication, we get, or I'm sorry, some subtraction, we get 39,436.94. Now we're going to do our multiplication and we get $8,676.13. Add that to line 2C and we get $17,911.13. Divide by 26 because we're in biweekly. So our tentative withholding amount is going to be $688.89. Now we have to get all the fillers of what this guy did. So he had $10,000 in taxable or in child credit, dependent credits. So we're going to do 10,000 divide by 26 and get 384.62. And then subtract from our 688.89 and get 304.27. Now this person didn't have any additional amount like the previous person we had talked about. So we're gonna put 0 there. And again, we get 304.27, which is exactly what they got.
Melissa, did you get that out of publication 15?
Yes.
What?
This
This?
worksheet? Yeah.
Yeah.
Okay, I'm just gonna put it in the link. I pulled up the W4 link, but I'm gonna pull up publication 15.
Oh,
And then just to make sure that for our RCH credits that we are answering all of the questions, if you're here for RCH, type the question or the answer into the chat just so we have a record of your participation.
hint,
For
hint,
the
hint, the answer's at the
ACA.
bottom, the correct answer.
Thank you.
Questions on percentage method? It is kind of, I mean, it's kind of a pain, but it's, like Angela said, you go through it a couple times and it's not too terrible. All right, so let's talk about the optional and mandatory flat rate methods. So supplemental wages can be many, many things. The IRS says that if you have supplemental wages, that they are subject to either the optional or the mandatory flat rate. The optional percentage for 2020 is 22%. The mandatory flat rate is 37%. And again, the mandatory we talked about is if you've had over $1 million. Okay, so under the regulations, a higher mandatory flat rate applies when the year-to-date supplemental wages are in excess of $1 million. So if you've had $1 million in bonuses for the year, you have to pay more tax. If you have had over $1 million in bonuses for the year, you need to let me know where you work because I'm going to come work with you.
Hey.
An employee works for 2 employers owned by a common parent company. The payments made to both employers must be aggregated to determine if the $1 million supplemental wage threshold has been met. If the employee was paid $750,000 in supplemental wages by one related employer and is paid $350,000 in supplemental wages by another related employer, then $100,000 in supplemental wages is subject to the 37% mandatory flat rate because that's what's over the $1 million. Okay, so the optional flat rate method is if you have not earned over $100,000 or over $1 million in supplemental wages for the year, then the optional flat rate method can be used when getting supplemental wages, and that optional flat rate is 22% for 2020. So Carol, who claims married with 2 allowances on a 2018 W-4, is paid $1,500 in federal income tax wages biweekly, and her year-to-date wages are $15,000. She has had federal income tax withheld on previous paychecks, and she receives a bonus of $2,500 on July 15th of the year. Her employer treats the bonus as supplemental wages and can withhold $550 for federal income tax because $2,500 supplemental wages times the optional flat rate of 22% is $550. The reason they can do this is because her pay stub makes it clear that the regular wage payment is 1,500 and the bonus is 2,500. So they can treat those separate and withhold separate. So they can do the 22% on the bonus and then the regular withholding based off of either the percentage or the wage bracket method for the regular $1,500.
So when it's clear, you just mean one is labeled regular and one is labeled bonus.
Correct.
Typically, do you find that most people put them on separate checks?
Yes. Yes, I do. Good question. The aggregate method says the employer must use this method when an employee has no federal income tax withheld from regular wages, except when the employee's year-to-date supplemental wages exceed $1 million, and then you have to use the 37% flat rate. The aggregate method is especially useful if the supplemental payment is issued separately from a normal paycheck. Use the following steps to calculate withholding. So you're going to combine the supplemental wage payment with the wages paid during the concurrent or most recent payroll period of the year. You're going to determine the amount of federal income tax withholding as if the total of the two payments is regular wages, using the employee's marital status, number of allowances, and either the wage bracket or the percentage method. And then you're going to subtract the amount already withheld from the current or last wage payment from the amount calculated in step 2. The difference is the amount to be withheld from the supplemental wage payment. So let's look at an example. So Jack, who claims single or married filing separately with no other adjustments on his 2020 Form W-4, is normally paid $1,500 biweekly in federal income taxable wages. Between paychecks, Jack receives a production bonus of $400. Using the aggregate method, the amount to withhold from the bonus payment would be calculated as shown. So the aggregate method says we're going to take the two things, we're going to add them together. So we're going to do 1,500, which was his regular wages. We're going to add the 400. So we're going to say that his taxable wages were 1,900. Looking at this here table, if we go to 1,900, which is down toward the bottom, and we go over to married filing jointly. Nope, married filing.
No.
Jointly?
Oh, it said separately.
Single or married filing separately. Correct. 19. Let's see. Well, then I have messed up on my example.
They use 100 too in their
They did use
example.
100 too.
They messed up on their example.
Well, let's pretend it says married filing jointly. How's that?
I like it.
Like, I know this looked fine this morning. So anyways, the withholding was $100. So then withholding from the most recent wage payment of $1,500 is 55. Again, they used the married filing jointly. And then we subtract the 2 and get 45. Whoops. I don't know a ton of people that use this method, but it's an option.
I mean, I've seen it a couple times with bonuses.
Yeah.
Help people calculate that.
Sure. Great. So using the optional flat rate method and the wage bracket method, calculate the employee's federal income tax withholding based on the following information. The employee is paid $860 semi-monthly and has a $430 bonus included with this paycheck. The employee's total year-to-date wages are $25,000, and the employee claims single one on their 2018 Form W-4. So I gave you the table that's already for forms before 2020. Why is it important that they tell us the year-to-date wages are only 25,000?
It's not over $1 million.
Hasn't met the threshold, yeah.
Yeah. I can see Mannon's bun. I know she's still working.
Oh, wait. 290.
I don't think I got the right answer.
So the right answer is $150.60. And the way that we get to that is we're going to take the $400 or $430 bonus to get this supplemental that we're doing, and we're going to multiply it by 22%, and that gives us $94.60. And then the 56, whoops, comes from the 860
Mm-hmm.
and one allowance. So second one from the very bottom on the one allowance column is 56. So 56 plus 94.60 is 150.60.
That makes sense. Okay.
I will say it was less confusing when there was half the tables, because before the 2020 form you only had one table to use, and now there's many. So Social Security tax, I'm pretty sure we're all pretty good at this one, so I'm not going to go into a whole bunch of depth. The Social Security wage limit that you guys will need to focus on for your test is the 2021. So 137.7 is the limit for 2020. I didn't put the limit for 2021 on here because I don't want to confuse you. If you subtract, or if you multiply by the 6.2%, the maximum amount that can be withheld is $8,537.40. So here's an example where Brad has received $137,100 in wages. On December 18th, he is paid $1,500. On this paycheck, unfortunately, he's going, well, I don't know if it's unfortunate, but it's unfortunate for our calculations. He's going to go over that Social Security wage base. And so we're going to have to figure out how much he owes in Social Security. But it's not going to be on the whole $1,500 that he was paid.
And I'm going to absolutely say this calculation is on the exam.
Yes.
Where, yeah.
100%. They love to go over those limits, whether it's the Social Security limit or the Medicare for additional withholding. They love to do things that are in those ranges. So
yeah, and then throw in 401k and maybe a Section 125.
yes.
So,
yes.
Absolutely.
Agree 100%. So in this example, on December 17th, his wages were $137,100. We're going to add $1,500, and that gets him to $138,600. If we subtract the Social Security wage base of $137,700, we get $900. So he's $900 over the wage base. If we take our $1,500 that he got and subtract the $900 that he's over, that means that only $600 of what he got paid on this check was eligible to be Social Security tax. So we're going to take our $600, multiply by 6.2%, and get $37.20. The whole $1,500, on the other hand, is subject to Medicare tax. So to get that tax, we're going to multiply by 1.45%.
And what's the rate where you start, the dollar amount where you start adding that additional Medicare?
200,000.
200,000.
Yep. And the additional Medicare rate is 0.9. And that is only for the employee. The employer does not have to pay the additional Medicare. Okay. So there on the bottom, there's a little bit different method of calculating, but you get the same answer as the first one. So the employee and the employer are both responsible for $58.95 in Social Security and Medicare on this particular wage payment. And yes, Angela is 100% correct. Put a star on this. If you use PayTrain as a source, they have a lot of these questions that are really good to work through as examples before you take your exam. All right, here we go. Practice. An employee with year-to-date taxable wages of $136,500 is being paid $6,500 for the last pay period of 2020. So how much Social Security tax? They're only asking about Social Security tax. So not trying to trick you. How much must be withheld in Social Security tax only?
I know this one. I know this one.
Oh, I got it.
What'd you get, Manon?
C.
That's what I got too. I will tell you though, if you look at D, D is the answer if you did the taxable amount on Social Security and Medicare. So some of what they do is they take a common mistake that you could make and give that as an option for some of your answers. So just be a little careful on that. So the amount over the wage base was $1,200. And if you multiplied that by 6.2, just the Social Security percent, you did get answer C. But if you had multiplied it by 7.65%, which was Social Security and Medicare, it does come out to the answer for D. So just a heads up on that. They like to do things like that to you. It is 11:43 and we're at a pretty decent stopping point. Do y'all want to continue or do you want to stop for today and finish up tomorrow?
Stop. Teresa's already left. She had a meeting, so we're down one.
No problem.
I like
Question?
these 45-minute sessions. That's
Oh, I do. It's much more palatable than
Yeah.
if we had to do this for 2 hours at 8 o'clock at night, Melissa.
I wouldn't.
It was awful. I was a pumpkin.
Right.
And then you'd give us pop quizzes, and I was like, I don't even know what you're talking about anymore.
And I am a morning person, as you all know. I would much rather get up at 4 a.m. and work than be working past 5. So that 6 to 8 session was real rough for Melissa.
It's rough for everybody. All right, kids. So
all right.
tomorrow, again,
Thank you.
same time, same place.
Same time, same place. See you all tomorrow.
Okay. Thank
Thank
you.
okay.
Thank you.
Bye.
Bye-bye.